Hi guys, and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So I made a video on the topic of index funds a while back now, and if you know me personally, you know how much I love index funds and constantly recommend them for building wealth and growing money without doing a thing. And I've said this before, I'll say it again. As far as I know, and from my own experience, index funds are literally as close to free money as you're able to get on earth today. They really are. They're completely passive. It takes literally minutes to get them set up when you've decided on the right fund for you. And from there, again, you do nothing and your money just gets to work growing. Very slowly and steadily, I should add. That's the obvious downside. And it's certainly not without risks, of course. What investment is right? But we'll take a look inside my Vanguard accounts in just a second, and I'll show you my experience of using them. First though, I just want to add that whilst I use Vanguard because they offer the most competitive fees in the industry, I'm in no way affiliated with them, and I'm not here to recommend any particular fund or funds or index fund providers. All I'm doing here is sharing my own first-hand experience along with sharing information and so on. So before we dive into my Vanguard account, for those unsure what an index fund actually is, simply put, an index fund is a portfolio of stocks and or bonds designed to mimic the composition and performance of an index, i.e. the S&P 500 or the FTSE 100 and so on. So why index funds? Well, for those who want to grow their money without any hard work, without maybe investing in property or REITs or actively managed funds or other investments, index funds provide the opportunity to just allocate capital to a fund or funds and just walk away. Zero work, and just let the money slowly and steadily compound and grow. They also have much lower risk and much lower fees than all of what we've just covered. So, you don't have to bet on the housing market. You don't have to pay huge chunks in fees to active managers and so on and so forth. You're basically just saying, look, I believe that the economy will continue to grow in coming years, so let me allocate some capital to that happening via one or more index funds. Also, just very quickly, if you are enjoying the video today, it would be great if you take just a quick second to hit the like button, maybe leave a comment. That'd really help me if that's okay with you. So more on my experience of using index funds, and let's dive into my Vanguard account. So here we are inside my account, and I first started using Vanguard just a few years ago now by opening the general account that you can see at the top, which has generated so far a pretty huge 31.72% to date. And again, I did absolutely nothing to earn that. I clicked a button and left it alone, which is pretty incredible, isn't it? I then later learned about the tax benefits of using an ISA as a tax wrapper, because for those who don't know, inside an ISA, you pay absolutely zero tax. And of course, outside of an ISA, you pay a capital gains tax. So it's much more efficient to invest via an ISA if you're here in England, because you get the exact same results, the exact same money earned, just minus paying any tax. At that point, when I learned about that, I then moved my account over, and since then, the fund has grown my money by 10.48% up to today. So in regards to which fund I actually use, I use Vanguard's Life Strategy Fund. Again, not a recommendation by any means. This is just what I use myself. The reason I chose this was for two reasons. So firstly, because of the extremely low fees, which means I keep more of the money generated. And secondly, due to the diversification that the fund actually offers, with being able to select a level of risk that suits me in regards to a balance of stocks and bonds. When I first opened my general account, I used their 80% equities, 20% bonds balance. And as I took my account into the, well, let's just say slightly higher amounts, I then moved this down to their 60% equities, 40% bonds balance to, again, reduce volatility and bring risk down slightly. So in regards to volatility and risk, as the website tells you itself, shares or stocks or equities as they're also known, typically give you a high return over the long run. But, as always, this comes with, again, an increase in risk and volatility, whereas bonds are more stable. But on the other side of this, they offer lower potential returns. So of course, having a mix of both balances risk reward. So the mix that you decide on would really be relative to the money you have invested. So let's say, as an example, you've got £1,000 or £2,000 or £3,000. You, in this scenario, would really want to go 100% equities because the priority is growth above all else, isn't it? In my opinion, that is. Because if you lose money, it's a couple of £1,000s, isn't it? Whereas if you've got, let's say, 100, £200,000 to invest, you might not be quite as comfortable with the equity swings, and seeing your account go back and forth by a few £1,000s might scare you and mean you pull your funds. So in that case, you definitely want some bonds in the mix to, again, reduce volatility and risk. Now, am I biased towards Vanguard? Absolutely. I put literally weeks and weeks of research and reading into index funds before I allocated any capital, and Vanguard for me came out way ahead. And the Life Strategy Fund in particular, again, for me, just ticks all the boxes. Would I recommend them? Yes, absolutely. But again, this video is more an informative guide than anything. So please don't just take my word for it. Go and have a look around, do some research and so on. No investment advice here whatsoever. That's just my outlook and what I physically use myself. Anyway, I hope that helps. I hope that's triggered some inspiration. I hope that's given you some more to think about in regards to index funds and how they work and how they're balanced and so on. If you do have any questions, that's what the comments box below the video is for. I'll leave it there for today. And as always, guys, trade with edge, with consistency. And I look forward to having you back here on the channel soon. Thanks, everyone.